Good evening, everybody. I hope that you are doing very well, and welcome to tonight's Contenders live stream, the 4th of November, where we're going to be going over the three drives pattern, as well as looking at valleys and peaks. These are patterns that you see almost every single day, so obviously they're pretty important to know about. And the 4th of November, obviously a pretty special day, US elections that we have going on. So it's a crazy day on the markets, legacy market, your standard markets over on the stock market, and the volatility has followed across as expected on Bitcoin today. So you're seeing Bitcoin up today. You're seeing the stock market up. You're seeing you're just seeing a lot of volatility really across the markets. It's pretty interesting. So I hope that you are all well, and I hope that you can all focus sufficiently well on the stream. I've got a comment saying sound is good. Thank you, Nick. with that said, let's begin. The disclaimer we have that at the start now, though. So, in tonight's live stream, we will be I think I might switch up the way that I do this, thinking about it. I think I might do chart of the week second. I think I'm just going to start with the three drives and valley patterns, and then I'll move on to chart of the week after I've finished the three drives and valleys, because I think that I might do it in that way today to get over to do the educational bit first, and then I kind of want to take a look at Bitcoin as well as going over an altcoin. So I am going to mix up the layout, and I'm actually gonna just because it's really volatile today, I think it makes more sense to go over this while it's not really moving, and then maybe towards the end of the stream we get some movement. So that's what I'm going to do, and then we'll obviously have the questions. So I'm going to do the three drives, then I'm going to do questions, and then I'm going to end with the chart review. Okay, so that's the way that we're going to be doing it tonight. So starting with the three drives pattern. Obviously we've been doing around this, but I've never dedicated a stream to it, and it come off the back really of me adding it in this one in because of the trade that it gave us for last week. Now it amazed a lot of people, I suppose. So it was worth dedicating a stream to this three drives pattern. So what is the three drives pattern? You've probably seen it quite a lot now after the success that it had last week, and that is it's a pattern that requires 3 attempts at a level, essentially, before a reversal. Each dip, okay, so obviously if you get, we'll get to it in a second, obviously this is a bullish pattern and a bearish pattern, depending on which way the drives are. Each dip goes to the CC. Each attempt, then so it move up, CC, then each extension of the drive goes between the 1.272 to 1.618 extension. These are guidelines. So for example, if it does like a 1.1 extension or a 1.7 extension, you're not going to be like, right, oh, it's totally invalid. So you do have to get, you do have to give these things a little bit of leeway, use sort of intuition and experience to judge, okay, I'm not going to invalidate something because it's gone 0.1% over what Daniel's wrote here, sort of thing. But you're looking for the CC region on each dip, and then at each attempt upwards, you're looking at those 1.272 to 1.618 extensions, okay? And the reversal goes to the overall CC support. So I've got a cheat sheet for this. But essentially, that's what you're looking at. And then on each of the three drives up, which you'll see here, each of these three drives up. So basically, this is what a three drives pattern is. It's integrated into TradingView, so it's pretty nice. Basically, get your first drive. And this could be from like a support, kind of like Ethereum. Ethereum got its first drive up today, we could say. Okay. So this is basically a drive upwards, which is overlapping. Okay. So you get the overlaps here and you get the overlaps here. Okay. So that's something to be aware of as well. So basically you get drive one of any size. And maybe we'll look at Ethereum in a second, just because it potentially has this. But you get drive one up. Then you get the retracement of leg A, which is basically at this, officially 618, you're looking at that CC region for the retracement of A. You get drive 2 up, which is when you start to take your Fibonacci extensions. We'll go over this in a live example. But basically, that's then between the 1.272 to 1.618 of the 1A. Then you get retracement B, which is again around that CC region. And then you get the impulse up for the 3, which again is at the 1.272 to 1.618 expansion of 2B. So as wrote here, the 3 drives pattern is a reversal pattern similar to the ABCD harmonic pattern. Okay, so this is similar to the harmonic. Okay, that's why it's pretty nice. It's got harmonic, Fibonacci, and integrated into it. It can be a bullish or bearish pattern. Obviously here it's bearish because after drive 3, you're looking for the the move back down from the low up to the high, the CC again. Obviously, if this is flipped, then it's obviously a bullish pattern. After you got 3 drives downwards, you look for the move back up. Price should spend equal time on forming drive 2 and drive 3. So this is again where it's really similar to harmonics. As we know, when we're trading harmonics, we look at symmetry and we look at Fibonacci time, as you do look at Fibonacci time with this pattern. So basically, you're looking really for a one-to-one of the A leg to the B leg. Basically, you're looking, let's say this takes 1 day, you're looking at this one to take 1 day. So you got the symmetry within the pattern as well. Corrections A and B should also take same time. So the pattern has a lot of symmetry, essentially. So you can imagine this being the ABCD harmonic pattern. There are 2 ways to trade the 3 drives pattern. Obviously, number 1 would be enter a position at point B and target, move up for your target, which is obviously the 1.272 to 1.618 of 2 down to B. Stop loss would be below, well, here, this is a cheat sheet that I made a while ago. We can now say stop loss really, I would say, would be below probably 2 higher lows back, which is you're going to arguably place a stop loss below here, or at least the last higher low back. But again, it's quite hard to give like generic stop losses because, as we know, real world context is going to be like, well, we can't just use a standard, really. You're going to have to go use higher low structure, which is generally going to be stop loss below A or really stop loss below the low, unless you're trading off of a lower wick, and then you use that as your stop loss. Or 2, take a trade on drive 3, which is going to be up here, and target the 618 retracement of the entire pattern, which is obviously the bottom of drive 1 to the high of drive 3. And you could essentially, again, I wouldn't really recommend this, so it's kind of just because I have to write something. We could put the stop loss above the 1.618 extension, because knowing that that's where this should top out. I wouldn't really do this, let's be honest. If this is a real world scenario, I'm not going to be using that as a stop loss. What you would be really waiting for is the rejection and then the move sort of off of those highs, and then you have a stop loss. So you kind of you hold fire for a rejection. Possibly that's one way you could trade it. Or alternatively, if you have prior structure, let's say you had prior structure back here, which has gone down, up, and then you're looking for your short here to put in a lower high, lower low, lower high, lower low. This could be the lower high, and you're going down again for the CC. If you've got 2 higher lows back here, then you can be placing your stop loss up here, imagine. Okay, just imagine there's price action. That's the way that I would base stop losses, not off of like arbitrary Fibonacci numbers. Okay, so I've got now the example. So basically the theory behind this is that on each push upwards, okay, so drive 1, drive 2, and on in each drive, the divergences are getting bigger and bigger with each push upwards coming on less volume. So you could be looking at, for example, you could be looking at things such as RSI divergences on this. You could be looking at volume divergences on this. Or you could just be looking at simply the fact that you're running into resistances. But you want to really be seeing some form of divergence on each of the pushes, because at the end of the day, you have to remember that you are shorting a local higher highs and higher lows. So you definitely have to have confirmation or confluence up at those highs. So you would really want to see that divergence, possibly primarily in volume. Okay, shorts come in and take over on an increase in volume. So what we're saying here is when you start to get that pullback, you would really want to see the volume start to increase. Okay, open interest increasing as you are getting the pullback. That signifies, okay, you're right on the idea. And when you reach the CC of low to high, that's where you could be judging to yourself then, okay, am I going to be swapping this short back into a long? Because you do have to remember that this low to high CC is going to be a potential reversal point. That's where you could be judging. Okay, am I now going to switch this short into a long, or am I going to hold this down longer, just take a profit here and search for lower levels? Okay, so this is the example from last week now. Okay, wasn't that long ago. We're now up at $14,000. This was a brilliant trade, if I say so myself. But obviously, I was posting this one in the group. And again, it's not picture perfect, but this is the thing. And I think this is what does come with a bit of experience and time. That it doesn't have to be so picture perfect. But this is something that I gave to everybody. And I was like, okay, I'm looking down for around this $13,050 to $13,000. Because here we had the, that's where the target was for this pattern, and this is obviously where I was looking for a full reversal, and this is where we had the confluence. So this is something again where we're kind of like adding in tools, and this example here is, well, we all know it traded also perfectly. What I done here was a little bit an idea that I think it works really well, is you pull a pitchfork on the top of the drive 2 and on top of the drive 3. So then you've got your points, and with your 3 pivots there, you obviously form your pitchfork. This is a standard pitchfork, okay? So standard pitchfork, what I recognized at the time was, okay, we actually have the target here, $50 target region from around $3,050 to $13,000. So it's $13,050 to $13,000. I knew that we had this zone of confluence between the 3 drives target as well as the pitchfork target. I just felt as if they were going to come together. And obviously that did happen. And you will know now very well that it kind of ended like this. It came down to the target where we had the pitchfork actually fully timed the low, as well as the 3 drives pattern coming to its target of the low to high coming to that CC, which was a $50 region really, from 13 to 13.50. We came to that target. And well, look at the reaction. As soon as you hit the 3 drives pattern target, as soon as you hit the middle of the pitchfork, the confluence there is kind of like, see you later. You went up nearly $600 in, in literally a few hours. So incredible. And this is why there were so many questions for the 3 drives pattern this week, because after I gave that trade, I think people were impressed. I was, yeah. So that's the 3 drives pattern. It's not really so hard, but yeah, obviously gave brilliant trade there, and now we obviously see about $14,000. So this is a similar theory, the valleys and peaks, and this is something that we have obviously spoke about quite a lot, because this you literally see every single day. Yeah, the 3 drives pattern, you don't see it. It's not really, you don't really see this one every day for it to line up so nice, but the valleys and peaks, yeah, you see this basically every single day. So this is pretty important. So this is where price would attempt to break a high or a low 3 times. So it's very similar to the 3 drives pattern. Okay, in that regards, that there's 3 attempts, but it's different in terms of, it's generally speaking 3 long lower wicks. That would be a perfect scenario anyway, and you don't really need to take into account Fibonacci on this. It's more like if you're going into a really pivotal level and then you get 3 valleys and peaks, well, that's when this starts to become really something to be aware of, I suppose. So each attempt is brought up quickly, or each attempt is on lower volume with divergences. So that's obviously similar to the 3 patterns, 3 drives, and then price reverses quickly after the 3rd attempt. So here we have a few examples. Okay, so this was from yesterday when you were coming back to test the $13,300. So this would have been 2 days ago now. So I've done this yesterday. Basically, what you see here is attempt 1 with the long lower wick, attempt 2 with a wick, and attempt 3 onto that. This would be obviously your 3 valleys because it's to the downside. But you get 3 attempts. And why is this so important? Because it's 3 attempts at a massively important level. If you've been following my trades for the past week now, you will know that I recognize $13,300 as a very important support level, because it was the old range resistance. Okay, and obviously, yesterday, 2 days ago, we broke that level. Thus, when we're back testing a old, really big resistance, you expect it to flip to support, don't you? And then when you get 3 valleys onto the level that you're also aware of, well, then that's just lovely, isn't it? Because you see attempt 1 at the level, attempt 2 at the level, you see a third attempt at the level. No, there's no conviction. And that's when you see the takeover. That's when you see the imbalances forming out of this. Okay, and so it's kind of as if you attempt the level 3 times. If there's no breakthrough, then the other side of the market. So let's say that if bears have attempted 3 times to break down through a really crucial support, and that there's no conviction on any of those breaks, well, then that's when bulls can just come in and take over. And that's generally what you'd want to see, a quick move out of the level with your buying imbalances. Obviously, this is what you can look at Sierra charts, Exo charts. You want to see those imbalances coming out of this with a lot of conviction with the increases in volume, and you've got yourself a reversal. Obviously, you'd hope for. And this is the same. This is from last week where you had a really perfect this would be peaks. So obviously your valleys are when it's to the downside, your peaks are when it's to the high. Attempt 1, attempt 2, and actually had a really big rejection on attempt 2. And then attempt 3 is where you come up into the level, and here you kind of just get a rejection and move back down. But that's the three valleys and 3 peaks. I want to go through, I think, here. Let me load up on the charts. Just try and find an example here then. Just trying to eyeball if I can see an example here really quickly. I'm trying to eyeball an example. Right, let's just draw it out a second so people can actually see I want to do the 3 drives. I was going to do an example, but I actually can't see one on the chart offhand here. So it's located here, and you've got under the XABCD patterns, you have 3 drives. You got impulse, retracement, impulse, retracement, impulse, and then you look for this, or you obviously have your impulse, retracement, impulse, retracement, impulse, move back down. Okay, so when you're pulling your fibs, obviously you look for your CC, you look for your CC, and then once you've got drive 3, which is the high, you look from the low to the high, really into that CC. Make sense? And then obviously on the flip side, you go from the low of the impulse, the high of the impulse to the low, and you put on your expansion, and you really look between the 1.272 to the 1.618. Then obviously you get your CC from low to high, and then once you got that, you put again high to low. You look between the 1.272 to 1.618. Once you got that in, that's when you look for your overall CC. Okay, and that gives you your target of the trade. So that's how you pull it, and that's where the pattern's located, simply called 3 drives pattern. So it's brilliant. Yeah, it's pretty good. So I don't think that's too difficult tonight. I feel that that's pretty simple stuff, but nevertheless highly effective. So 3 attempts at a level. If no break, watch for the reversal. Is there any questions? There might not be many questions because I think, hopefully, it was not too difficult. Let me see. Let me see. And then I'm going to go over Bitcoin for the rest of the stream, I think. And an alt. I will do an altcoin as well. Okay, I think that there is literally only one question here. For the bearish three drives pattern, I'm not sure how you know what angle to pull the last purple line that intersects with the pitchfork. So the question is referring to this one. And it says for the bearish three drives pattern example, I'm not sure how did you know at what angle to pull the last pitchfork. Well, let's go to this section of the chart. It was on the move down to 13k. It's gonna be actually a mission to find it. Okay, I actually can't remember the exact day that it was on. Yeah, it's really hard to remember actually the exact day, because I crop out the day. I can't actually remember what day it was on this trade. I guess I can search for it a second. Let me just search for it. Daniel. And 3 5 I'm trying to find it. If I can't find it, yeah, here it is where we started talking about it. Yeah, so it was from then, the 29th of October at 10 past 10. Okay. And obviously that's when I was giving everybody the target. So let's try and find this on the chart then. 29th of October at 20 past 10. All right. 29th of October here at 20 past 10. So before it had this move down, and we need to go on to a smaller time frame. Back 29th of October. Oops. Right, so here it is. Okay. Obviously what I saw at the time was this. I was looking at this as impulse, retracement, impulse, retracement, and an impulse. I had it marked like this. And obviously I was looking for that back down. And that's how I could identify where I wanted my target to be. And what I had off of this target was a region, obviously between $13,050 to $13,000. Why $13,000? Because that was where I was also pulling the pitchfork. Also, it was like here you had obviously the point of control of the overall prior range. So that was massive support. And there you can see how it literally lined up also perfectly. But there was confluence that you had at $13,000. It was, you know, you had like this a CC, you had the lows that was being taken off drive number, you know, the retracement after drive 1. You had the point of control of the range. You had your bullish CVD divergences. There was more. You can just probably just go back to the chat during the time, because yes, we obviously spoke about it quite a lot. But yeah, I hope that explains. I can't remember what the question was now. Let me just load it back up. It was for the bearish three drives pattern. I'm not sure how you knew at what angle to pull the last purple line that intersects with the pitch. So how did I know to pull this one? So you have to remember, I was not actually shorting this high, by the way. So I was not shorting up here. I just recognized where I wanted to actually buy. Obviously, everybody knows I'm bullish on the medium term because I'm only looking for like swing trade longs, etc. So I wasn't even shorting up here. So none of this section I shorted. I was not shorting here. I was not shorting here. I was not shorting here, sort of thing. I just knew the section where I kind of wanted to go for the longs. So the answer, I suppose, to this question is, how did I know to pull the purple line that intersected with the pitch? Well, it's because it was already formed. So like live in the time, I was not pulling this. It was like the next day that I just had recognized, okay, I actually have now the pattern ready. So it's like I recognized it in the time that this is where this is the target region, the $50 target region. But up here, I was not shorting for a free drives pattern. It's like after it had already formed. And at this point, I sort of woke up in the morning and I thought, right, this is the target for the pattern. This is where we have confluence. That's where I want to go for the longs. So the answer to your question is, I knew to put it here because it had already formed. I was not in the time shorting up here for a free drives pattern. I woke up, I saw the pattern, and then I sort of went, okay, well, this is the target. Let's try and trade along off of the target of the pattern, essentially. So I hope that makes sense. So yeah, this wasn't like a live pattern that was sort of found. That makes sense. And the next questions. Got a few more in here now. What is your preferred time frame? I would kind of say I don't really have a preferred time frame on it. It can work on any time frame. Yeah, I would say I don't really have a preferred time frame of it. I guess I trade the most off of, let's say, a 15-minute chart, but I'm not going to say that's my preferred time frame for this pattern. I kind of don't have a preferred time frame, if I'm totally honest with you. It's really hard to give you a preferred time frame, to be honest with you. Maybe the 5-minute chart. If I might say the 5-minute chart, but I don't want to be held to this. It's like, oh yeah, maybe the 5-minute chart. But yeah, it works across any time frame. The theory is exactly the same, but maybe I see it the most on the 5-minute charts. Damien, is there any confluence we can add to this pattern divergences? Yes. So let's load this back up in here. So what you could be looking for in this is there's a mixture of things, really. Okay, so what I was going off of, because you have to remember that the way that I was trading this pattern was actually looking for the longs here rather than the shorts up here. And so I can tell you what you'd be looking at for both of the times. Okay, so it's obviously easier, in my opinion, to go for the long here because of the context of the market that we're in, which is like really bullish at the moment. Okay, so it's a little bit easier to look for longs than shorts. But what we had was bullish CVD divergences from this low here to this low here. We had a confluence of the previous range. Okay, so this previous range point of control, if I remember correctly. Okay, it was also this was $13,000. I mean, I need to try and find the exact. Yeah, just move it off to that last section, but you can see you had the previous range point of control right on it, which is obviously a massive level. Okay, so you had previous range point of control, you had the pitchfork, you had bullish CVD divergences, you have a massive uptrend. Yeah, Those are the sort of things that you'd be looking for anyway, in my opinion, of when you're looking to trade the or determining, are you going to look for the longs here or are you going to look for the shorts? You would also be looking at how's the volume going on the pullback here. You'd also look at open interest. How is the open interest going on the pullback down here? Okay. And then what you actually had here locally was pivot 1, pivot 2, pivot 3. So you almost have three valleys at the lows, don't you? There's attempt 1, bought back up. There's attempt 2, bought back up. There's attempt 3. So you almost have, to be honest, looking at this, you actually had almost drive 1, drive 2, drive 3, reversal. And actually you went through the 618 of the pattern and you had a really big reversal when you look at it like this, don't you? So there you go. That was something I also see now in the time, like now. And you would have then looked at this, get a little bit of a reaction, but obviously the strength is very strong and you can move up. But there you go. You actually had 3 valleys: valley 1, valley 2, valley 3, big reversal. Yeah, that's pretty good. So there you go. Actually, there was even more confluence. But other things that you could be looking at on this, for example, is the volume. Okay. So the volume also does relatively pretty nice, I suppose. Really low volume on the pullbacks. If we're honest, this is relatively low volume, and then you do get the break of the pattern on a bigger increase in volume. The biggest volume is coming off of this reversal section. That's when the volume starts to come in, obviously. Wouldn't say this is pitch perfect. Maybe you'd want to see an actual proper decline, but there's another thing that you can be aware of. You can also be looking at really standard divergences. You didn't really have, you had really slight bullish divergences then on your indicators as well. But those are the sort of things that you'd be looking at. But I think the most important thing is just being aware of the bigger picture and like where you are, where you're coming into these levels. Everybody, $13,000 was the range that we were trading. I even think that was in the post at the time on the 29th. We were literally trying to trade the range from $13,000 to $13,300. And I think that might have even been posted in the contenders section. This was on the 29th. So, okay, I couldn't remember whether I did put an update in there or not, but so yeah, that's kind of what you'd be looking for, those divergences, influence of other technical tools. But yeah, maybe like just standard volume or RSI divergences can be helpful, to be fair. But the most important thing is the context. Like, context is number one. You say that the more often a level is tested, the weaker it gets. Is therefore the volume and divergence is important. That's obviously true. The most important thing, like the number one most important thing, is context. So, for example, what I mean here is, let's say we're in a massive bearish trend. Then am I going to be looking for longs down here at this confluences? Am I going to be thinking support's going to hold? Or would I be thinking, if we're in a massive bear market, well, then the most likely thing is up here is where I'd be aggressive on shorts. Down here is where I wouldn't be aggressive on longs at all. And so the more the level is tested, the weaker it gets, is true. But what you have to see here is this level, well, it's not obviously getting tested perfectly because you kind of test, reaction, test, reaction, test, reaction. It's not like a flat horizontal level, so to speak. It's not like a flat horizontal level where you grind up against it and then you break through. It's actually like 3 attempts and then a reversal. So you get minor breaks each time, which is obviously different than your standard sort of patterns. But I think the number one thing is context. If you don't know how to read the context of, okay, is this a bullish environment? Is this a bearish environment? Okay, here you try and break through a level 3 times. You do get a pullback. Yes, you do. But you can also see how the pullback was really delayed. You get really delayed, the I don't know what to say really, but I'm not going to say that, obviously the theory is that the more times you test a level, the weaker it gets. That's 100% correct. But at the same point, obviously there's a little bit of a difference between like 3 attempts at a flat level and 3 attempts which are, downward sloping almost into a really high term time frame support level in a really big bull market. The context I hope that makes sense. If not, write the question again. But yeah, I think like I suppose just reading the market is really important. But so yeah, obviously the volume and the divergences can be helpful to you. And yes, the more times you test a level, the weaker it gets. But if you can see on each attempt it's getting like bought up really quickly and you're in a bull market, then that's obviously really, really important, I think, to be aware of. Ask the question again if that explanation didn't make sense. We have one more question sheet here. Does this work for low-term timeframes? I see this happen often. Yes. So the answer of this is yes. It definitely works on the 5-minute time frame. That's one of the best time frames I like on it. And yes, I guess this question was asked just before I showed that example. So obviously on that Bitcoin example, you had 3 valleys. It could also have been looked at as a 3 drives pattern. 100% yes. And on the lower term timeframes, it absolutely works as well. How often can we expect to get the 3rd drive instead of only 2? It's really hard for me to give an answer of how many times are you going to only expect 2. It's a really difficult question to answer. For example, here, I suppose we had drive 1, drive 2. Why were we expecting the 3rd drive down? And you can go back and check this. After we had this 2nd drive down here and we got a rally, you can go back and check the post at the time. For a scalp trade, I longed here. I actually closed it around here, and then I did scalp a short because I was expecting there to be a 3rd drive down because we hadn't yet tapped the 13,000 point of control, because we hadn't tapped the target of the pitchfork. At this point, I was very confident that we still get the 3rd drive because we hadn't actually hit any like of the major targets at this point. We had hit one target, but the bigger level to still be tapped was $13,000. So again, like the context is really important. Like this is going to be different in every scenario, isn't it? Like, so it's really hard. So basically, being able to read the market and context is just so important. But I remember very, very, very well indeed that after we had this low, my words were, I still expect one more drive to the downside, because this one here hadn't actually hit any of the major targets yet. It hit one, but I was still in the time expecting the 3rd drive, simply for the fact we hadn't actually touched the 13,000 point of control. We hadn't actually gone through the level. So, we hadn't hit this pitchfork target. So that's why. So it's really hard to give an answer of why would you only expect 2 instead of 3. The answer is you gotta think of, is that 2nd attempt actually coming off of any big levels? If it is, then maybe you only get 2 drives. But this is really context dependent. It's impossible to say, oh, you're only going to get 2 drives now and you're only going to get 3 drives. And like, you have to be able to read, the divergences, the volume, why you're bouncing off of the 2nd attempt. Those things are like pretty important to judge each time, because every trade's so independent and different. That's what I say. Do the fib levels have to match exactly, or is this a range? Yeah, they definitely don't have to be exact. So this is more of like a it's more of a essentially like a cheat sheet of, okay, these can be like regions you could expect, but they definitely don't have to be exact. Yeah, 100%. They don't have to be exact. So you're looking at the CC each time, but it could bounce off the 0.5 fib. It could go down to the 786 fib. You're looking for between the 1.272 and the 1.618. Could only go to the 1.1, or it could go up to the 1.726 Fibonacci extension, for example. So knowing when, okay, this has actually gone too far and it's no longer actually a 3 drives pattern, and recognizing, okay, I'm not going to accept a wick above this level because it's clearly being rejected. Being able to determine that is just going to, honestly, it's just going to come with like a bit of time and experience to be able to judge, okay, this is still acceptable, or no, this is actually no longer a tradable pattern anymore. But yeah, it doesn't have to be exact, but you do have to have the experience to judge when it's too much now and when it's not. There's not a cheat sheet for that, unfortunately. That's just going to come with time. So those are all the questions then. Cool. So what I want to do is go through Bitcoin. Okay. So yes, we've done the questions then. There's and then switch around the order. I want to go through Bitcoin and an altcoin. All I will say is the next Champions live stream is obviously going to be on Sunday. And the last Champions live stream was an absolute success. An absolute success. Because from last week's Champions live stream, which was on the 1st of November, the 1st of November, we were here in the chart. I gave the setup to everybody that the entry of this trade was 13,300 and about $58. I gave the stop loss, which was down at the lows, and I gave you obviously the targets, which we have just hit. Target take profit 1, which was $14,000, 268, I want to say. So I gave you basically this. Gave you the entry, the stop loss, and the take profit, and it was an absolute success, as we have hit take profit 1. Actually the take profit 1 got front run literally by $8. So my take profit on the stream would have actually been $12,280, $87. Okay, and as I wrote again in the chat earlier today, and let me try and find it a second so you can actually see, because I want to update you basically on the position. Yes, this is what we were at. So obviously the next take profit, this is while we were still a little bit away from it, was obviously $14,287. Obviously I done the $100,000 position at this, and it's a 0.5 Bitcoin profit because we're obviously about 7% up. And yeah, the take profit missed by $8. And really simply, I went into the account and took the take profit. I didn't want to get greedy on it, and that was a quite good decision. Obviously, we saw a bit of a pullback, but yeah, I mean, there we go. How beautiful was that trade setup? It really was amazing. So everybody should be making money right now, which is obviously absolutely brilliant. And I did move my stop loss up, so the stop loss is now no longer so big. I actually moved it up to the last lows here. So that's my new stop loss, by the way. Really simply because I don't want to see price going back down here anymore. So yeah, I now have secured 2 take profits because I took a take profit early as well. I think I moved a take profit to around 13,900, which was a 10%. So I've taken 30% take. I've took 30% of the profit on this trade. The stop loss has been moved up. So if I was to get stopped out of this trade, it's now 100% a profitable trade. Obviously, we still do have a potential bigger target here, and we have a few more take profits along the way. But nevertheless, that's a good one so far. I'm very, very, very content with that. And in the next Champions live stream, we'll be going through number going through the next setup, I suppose. We've done 3 weeks so far, and every week has been profitable. So I'm very content with that. So that's what you can look forward to on the next Champions live stream. So with that said, let's go over Bitcoin then. Okay. So let's just do this into this. Oh my, oh my, oh my, oh my, oh my. Just trying to move around my windows. There we go. And there we go. Oh, there's one more bit of questions that have come in. Would you also consider this three drives pattern as a leading first wave diagonal with a bit more complex WXY? No, I wouldn't even try and add in Elliott waves into this. If I'm totally honest, I personally wouldn't. I would not be trying to do a low term time count Elliott wave count with it. To be honest with you, no. I wouldn't do that. I'm not saying you can't, but I wouldn't do that. We have three tops. November the 2nd. Last wave went to 1.272 and it's overall pretty symmetrical. Could this be classed as a three drive pattern or rather to first two swing? Posted a chart. Let me check. 5-1, drive 2, drive 3, 1.23, 1.23, 1.23. Let me draw this out a second and see what I think. So, if I was doing this, I think I do agree it's an acceptable place to start a pattern. With drive 1, drive 2, 3. I would say this retracement is really, really, really heavy. And this retracement is also really heavy. I have to say that I personally don't feel as if the high will be in on this pan. Firstly, I don't really like it so much because I don't really think it's very symmetrical. This first bit of the move is not very symmetrical, but the second bit is obviously a little bit nicer, to be fair. I do believe that there's going to be at least one more push up. Which would be a little bit better, really. You know, maybe just that 1.618 region, or at least swing fire powering the highs. I mean, it's pretty. I mean, I would say that I don't really like this first drive. I don't really feel that this is very valid, but this next section is really valid, in my opinion. So you could actually look at it like this. I just don't like this first section of it, but I do like this. So maybe it goes more like this. And then a bigger move down. That, I think, is a lot more acceptable. Unless, of course, we've just literally put in the high. But I feel in terms of looking at something that's a little bit more valid, this looks as if it would be more valid because this section here is just way more symmetrical. You know, you obviously about it could potentially be the high in and you get this retracement. But I do think you're going to be looking for this. Looks a little bit more symmetrical looking, in my opinion. Yeah, that's kind of my answer for you there. I think that this is potential, but I kind of don't really like this first section. I like this section. And it's my thoughts anyway. Could the current ascending Bitcoin channel see a possible reversal from the free touch on the top? So that's basically the same question. Essentially, that's exactly so. Yeah, it's the same question that I just covered, and I think there's a potential that this is a free drives. I guess it could make sense if your other markets start reacting more bearishly. If you've put in your top on the ES, you've put in if you start to retrace on the GC, you start to impulse up on DXY, that obviously increases your probabilities. I mean, the results of the election are not out yet, and we all know that's probably going to have a big effect, depending on who wins. If there's a winner, it's probably going to have a big effect on the election. So, I mean, if the results come out and nobody likes them, and they get a really big bearish reaction, and the high's in on the ES, and it tumbles down, well, yeah, it's absolutely possible that the high is in right now, and you got this pattern. But there's a lot of ifs in there, a lot of ifs that are too much for me. So, yeah, that's kind of why I'd say it's a bit too, I'd kind of just why I don't really like the first section of the free drives pack, to answer your question. There you go then. So that is all of the questions now done. So Bitcoin then. As mentioned, we're obviously in a swing long trade. Hit, for me anyway, 2 take profits, and I imagine people are kind of following along on this. So 2 take profits. I'm still, if I'm honest, I'm still looking for this to push higher. Okay, I'm not really bearish at the moment at all. And yeah, I'm really still looking up for the next take profits of exactly the same as last week on the live stream. $14,600 the daily, and then the high up here at around $15,200. Okay, so this is not really changed for me. I'm still kind of after the same sort of targets on Bitcoin. With the now, obviously, with the stop loss moved up, it's now looking like this with a take profit one. I can't remember the exact level that I gave you all a few days ago, but it was around here, and then obviously I closed out slightly more down to take profits on that. But I have to say, I'm still looking for higher, unless the ES takes a tumble, which is possible. Unless the ES takes a tumble and the reaction from the elections is really not liked, and the general market start falling, I don't know, that probably could sway my opinion on it. But as it stands right now, as I'm speaking to you right now, I have to say I'm still looking for higher prices. Okay, and I'm obviously still in the swing long. So there's that. Yeah, with the alts, I was actually going to go through. I was debating which one to go through. There was a few ones that were brought to my attention. This thing called RSR, this thing called Algo, this thing called DOT. I feel all 3 of them have setups. Might just go through Ethereum though, because I think Ethereum is really nice at the moment. Okay, this is obviously a setup that I went through easily a week ago, and what I was looking for was this to come to the one-to-one extension, which it done this morning. Finally, after a very long wait, it's got to it. Obviously, what I recognized was the falling wedge, and I was expecting this to break down, because again, people are expecting this to break up, aren't they? They're expecting that. But I recognize Bitcoin is strong, and Bitcoin's more likely to push up, and that's what I was expecting the breakdown on Ethereum to more value, and that's exactly what happened. we got our touch of the daily, and then we come to the very great one-to-one extension this morning. Okay, literally this morning, and hovering around, down around there, and then obviously what we got, as mentioned in this morning's trading update, I was long on Link and Ethereum, both long, and what a great decision that was, because what we got was the really nice impulse out of this. I can safely say I was expecting it, and we got it. Really, really, really quick move to the upside. 4% up. Obviously, I'm trading the USDT pair over on Binance, so that was up even more. But yeah, now we've come up into the daily level once again. This is still an important level to reclaim, in my opinion. Still, you got to try and reclaim that daily. If we can reclaim that daily, I think Ethereum is looking really nice. At the moment, it's resistance, obviously. If we can reclaim that daily, obviously this is not to timescale this harmonic. Really, really not to timescale. So I'm not necessarily thinking it's going to go on also long sort of thing. But I'm looking for this sort of move to the upside, which could see you go up for about another, I don't know, 20%. Still think that you can get this. And then I'll judge at the time. Do I still think we're kind of going down for monthly? Obviously, this is an idea. I'm currently only long on Ethereum. So if it wants to do this, I am not going to complain. But I'm looking for this now. I'm looking for this section of the chart. Looking for about 20% move to the upside. Does it hit here and reject? Well, time will tell. I'm not going to be shorting this randomly. That's even if it gets up there. There's obviously no guarantee that that happens. But if it gets up there, I'll be very happy. Let's just say that. What it needs to do really, though, on this local term time frame is yes, we've had the reaction. But obviously, at the end of the day, this is still going in its lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. This could be a lower high, and we just fall straight back down. You know, that's possible. So you got a few levels that you really want to reclaim. You want to get back above that daily. You want to get back above that last high. If you can get back above this trend line, hunky dory, that's very good. I would say for another 15% move to the upside, at least. So that's what I would be saying right there. That's needs to get about another 5%. The trend would tell you I took a very risky knife catching long, okay, because I think you can say maybe that was a risky long to take, but it paid off. So I'm not going to be worried about it. Yeah, so there you go. I don't think there was any other questions. So there you go. It looks like Bitcoin's going to bounce, by the way. I'm kind of really would, yeah, I think Bitcoin's going to get a bounce up right now. So that looks pretty good. Yeah, there you go. I hope that you've all enjoyed tonight's live stream. I will wrap it up with the summary of the key points. So you basically get 3 attempts at a level, and you're looking for the weakness on each attempt. And then you get ready for the reversal after the 3rd attempt at the level. I think the takeaway thing from tonight, as I always do kind of say, is context, context, context. If you try and trade a pattern absolutely the same every single time, I think you lose money. I do think you will lose money if you just blindly follow a cheat sheet and you're like, oh, there's 3 attempts at this level, that's just short. There's 3 attempts at this level, that's just long. Yeah, that's not going to work, unfortunately. Trading is not so simple of just like following a cheat sheet. You just have to be able to read the market, and I think that's the thing that comes with time, you know. But yeah, that essentially in this live stream, I've given you a theory which is very helpful, but you do have to be able to read very well the context of the market. Why are you looking for longs? Why are you looking for shorts? What confluences do I have at this level? Why do I think this time we're going to get a 3 drives pattern instead of only 2 drives in a reversal, etc., etc., etc. These are all things that you sort of pick up and learn as you trade once a day or however often you're going to trade, sort of thing. It's just something you get an eye for, or you get a feel for. Obviously, sometimes you feel wrong. You feel there's going to be a reversal on the third attempt, and it goes straight down through what you were thinking. You know, that's part of trading. That's why you use a stop loss. It's not the end of the world. You take a loss and you move on to the next trade. I would never, ever, ever care about taking a loss in terms of feeling annoyed about it. You know, you just take a loss, you move on to your next trade. Feeling depressed is not going to get you anywhere. Same as if I miss a trade, I'm not going to be feeling depressed. I'm going to be like, okay, where's the next opportunity? You know, being annoyed about missing a trade or being annoyed about a loss or anything like this is not going to help you or anybody else. What you want to do is take that lesson and move on to the next trade, sort of thing. That's my advice. But yeah, from the free drives pattern, context is king. But it's the three valleys and peaks are something that you're going to see almost every single day. So it's a very good thing to be aware of. When you get those three rejections, one would generally expect a reversal, especially if you're playing into a higher term time frame level. Okay. So yeah, there you go. That's the live stream of tonight. I will catch you on Sunday or across in the Discord, I suppose. I'll catch you over in if we just load this back up, catch you over in Discord. Oh yes, of course, there is this new there is the new Bybit rewards for November. So this month you can get a free $500 bonus if you deposit 1.5 Bitcoin. So that's pretty cool. Just reminded myself as I looked at this. So yeah, that's the new bonus of the month, the $500 free bonus. If you want to make use of that and deposit at 1.5 Bitcoin. Obviously, if you only deposit 0.05, then you get $50 bonus. So obviously they reward you for depositing more. And would you look at that? Bitcoin is bouncing. I really want to go and trade this. I would have actually liked to have scalped the bounce off of $14,000, but I missed it. So there you go. But I'm thinking this is going to bounce. So anyway, there you go. I hope you've enjoyed tonight's live stream. Thank you very much, and I will catch you over in Discord. Cheers, everybody. Thank you, and good night.